All right, welcome to The Explainer. You can just feel it, right? The market is in this state of tension, just coiled like a spring. And with the new week about to kick off, we're putting our focus squarely on the QQQ. In this explainer, we're going to break down all the key data to build a real, actionable game plan for this Monday, August 11th. First things first, you know the drill. Our standard disclaimer, this whole thing is for informational and educational purposes only. It is definitely not financial advice. And remember, all trading involves significant risk. Please be smart out there. So here's our roadmap for today. We're going to start with the big picture, the current market landscape. Then we'll dive in and decode the invisible forces that are actually pushing and pulling the price. From there, we'll map out the key levels, the real battleground. We'll lay out two primary scenarios for Monday, and then wrap it all up with an actionable opening plan and, most importantly, how we think about risk. Okay, let's jump right in. Section 1, the current market landscape. So what is the exact situation we're facing as we head into Monday morning? The best way to describe the market right now is a powerful tension. Seriously, think of it like a giant game of tug of war. On one end of the rope, you have this massive cluster of call options, and they are pulling with all their might towards the 575 price level. On the other end, you've got a huge wall of put options creating a floor, pulling down right below $570. And the market? It's stuck right in the middle. So what is this invisible force that's pulling the market in two different directions? Let's take a minute to decode the two big technical concepts from the options data that are creating this entire setup. It's actually pretty fascinating. The first force we need to understand is called gamma exposure, or GX for short. Now, without getting too deep in the weeds, here's all you need to know. When GX is highly positive, it acts like a powerful price magnet. Market makers are essentially forced to keep the price stable. So every time the price tries to stray too far, they pull it back towards a specific strike price. It just crushes volatility. So where is that magnet pulling the QQQ right now? Well, all the data is pointing to one number, 575. This single price level is the market's center of gravity. There is a massive, and I mean massive, peak in positive gamma exposure right there, keeping it pinned. But what happens if the market breaks free from that magnet? Well, that brings us to our second concept, the gamma flip. This is a super critical price level where the whole market regime can change. You cross below this line and the magnet doesn't just turn off, the dynamic completely reverses. Suddenly, downward moves can start to pick up speed, they can accelerate. This is the danger zone. And that, of course, leads to the most important question. Where is this line in the sand? For the QQQ, the data is really clear. The critical gamma flip level is sitting right around $565. If the market breaks this level, believe me, the game changes completely. Okay, so now that we know about the forces at play, the magnet and the danger zone, we can build our tactical map. We can translate all this theory into specific price levels that literally form Monday's battleground. This table right here, this lays out the entire structure for us. At the very top, you've got resistance, which is defined by that big $575 GEX magnet. Then on the support side, while $572 is kind of the first line of defense, $570 is the real line in the sand for the bulls. A break of that level, well, that puts the $565 regime change level in play, and that could open up a vacuum, a trapdoor, right down to $560. So, with our map all laid out, you can start to see two primary paths emerging from Monday's session. It really all just comes down to which of those key levels holds and which one ends up breaking. This leaves us with two competing stories for Monday. The base case, the most likely one, is this bullish pin. As long as the QQQ holds above that 570 to 572 zone, the magnetic pull to 575 should stay dominant. But the alternative is a bearish break. If we lose 570, our focus immediately shifts down to that 565 gamma flip, where a failure could accelerate the selling all the way down toward 560. Now for the fun part. Let's translate all of this analysis into action. Here's a super simple if-then framework that you can use to navigate the market open on Monday. All right, plan A. This is our bullish scenario. If the QQQ opens at or above $572, the key here is patience. Watch the first 15 to 30 minutes. If the price is holding up, Any little dip into that 572 to 573 zone presents a potential entry point, with the primary target being that $575 magnet.
And then, of course, we have Plan B. This is for a bearish open. If we start the day below $570, or if we try to rally back to $572 and fail hard, the whole dynamic shifts. This plan is all about looking for opportunities on any weak bounce, and the confirmation you're looking for is a clean break, a 5-minute candle close below $570. If that happens, the 565 gamma flip level becomes the main target.
You know, a plan is only as good as its risk management. So let's wrap this up with what I think is the most important part: knowing exactly when a scenario is wrong and when it's time to just step aside. Here are the specific invalidation points, our get-out signals. The bullish case, it's pretty much off the table if we see a sustained close below $570. And the bearish case, it loses all its power with a strong move and hold above $576. And please remember, that 565 level is the high alert zone. The entire market regime can flip on a dime there, so caution is absolutely critical if we get close. And that leaves us with the one central question for Monday. The data is clearly pointing towards that magnetic pull to $575, but the risk of a breakdown below these key support levels, it's very, very real. So having a plan for both scenarios, well, that's what separates preparation from just pure prediction. And just one final reminder, this has been an educational framework. It is not financial advice. Please use this as a starting point for your own homework, and always make your investment decisions with a qualified professional. Hey, if this data-driven approach to the markets is helpful for you, you can find a lot more of our explainers over on YouTube. Just search for Elite Trade Radar. Thanks so much for joining us.